A lot of investors, many of you out there maybe, are spending millions of real dollars on real estate in the virtual world, the metaverse. Prices in some areas up more than 400%. So why exactly are investors rushing in and buying up all this virtual land? Let's bring in Janine Yorio. She is Republic Realm CEO. Their firm just putting out the 2021 Metaverse Real Estate Report, which I read with much interest, Janine, because I'm one of these ding-dongs that's trying to understand exactly how it works. Here's my question, though. I understand the value of what's being bought in the Sandbox and Decentraland and whatever, but what's to stop thousands of other metaverses from being created and diluting the value of all this property?
Well, first of all, I want to preface this by saying I love ding dongs. So thank you for spending time reading our report. If you think about it that way, you will talk yourself out of it. But I think you have to think about it this way. It's an enormous opportunity, and the metaverses that are launching early are most likely to find enormous user bases. So one important statistic to understand is there's only about 25,000 people that even own metaverse real estate today. So while there may be many more metaverses that crop up in the future, some of these early ones are going to have an enormous head start as we kick off the metaverse ecosystem. We're tracking over 300 metaverses, but only a handful have actually launched, and only about 24 or so even have land that can be purchased. So today, all the people that are looking to invest in metaverse real estate don't really have that many choices. And that's why we think it's such an interesting time to invest in this category.
And again, please, and I am that ding dong, so please correct me if I'm wrong. It's kind of like Bitcoin in a sense that in some of these metaverses, the Sandbox, for example, I understand there are fixed numbers of parcels that will ever be created, correct? 464,000 or something, or 646,000, whatever the number was. I may have flipped it around. But that's the value of that scarcity is what ultimately I think gives it that value. It's very much a Bitcoin-like argument.
It's kind of like Bitcoin. It's also kind of like buying a billboard in a video game. So think of the video game you know best. And if that video game were to sell a specific billboard, or if you play FIFA World Cup and you could buy the stadium signage and advertise Coca-Cola, you can start to understand why you'd want to buy specific pixels inside a specific metaverse experience. It's also kind of like venture capital investing, where we're investing so early that you actually have to assess the caliber of the team that's building this and decide whether they've done it before and you think they're actually going to be able to execute on a vision that's going to attract thousands, if not millions of users, and keep them coming back time after time. So it's really this very unique skill set that it's a mix of asset investing, early stage tech investing, and understanding the competitive landscape in metaverse, which is really just taking shape today.
Janine, a lot of people think the metaverse is over the hills and quite far away, but there are some names that make sense, and I'm not looking to play stock market here, but Roblox makes sense. Mark Mahaney says Coinbase will be the bank of the metaverse. Do these things sort of make sense to you?
Definitely. I think Coinbase will be certainly a player as they launch their NFT platform. OpenSea has really turned into the killer app for NFTs, and metaverse real estate, it's all NFTs. So the more infrastructure you can gain exposure to in the metaverse sector, the better. Obviously, OpenSea is still a private company, but they closed a big funding round this week, and I'm sure there are some secondaries floating around that opportunistic investors can pick off if they're really shrewd.
Janine Yorio, CEO of Republic Realm. By the way, your report was incredibly helpful and knowledgeable, a good primer as well. So, Janine, I hope people can read this and check it out. A lot of people have a lot of questions. Thank you very much. All right, Tim, bottom line this for us.
Well, look, as Janine said, in good times and bad times, the metaverse is there's a place that you're still very early on this trade. And whether it's a real estate play or whether it's a branding play, and we've talked about Nike's role, we've also talked about the chip companies, NVIDIA, AMD specifically. There's a lot of different ways to play it. I think you have to understand that there's going to be an element of this trade that also only works when you have a massive liquidity rush like we do right now, which isn't to say that there's not a long-term future here. But I think part of the pain we're seeing in broader high-risk asset classes is something that I think you have to be very careful right now when you're jumping into the metaverse.